Hey, what's going on, everybody? So you guys know my name is Yusef Scott, also referred to as the Forex GOAT. I want to welcome you guys here to the Southern Forex movement, where I help people just like you from all across the world, all walks of life, to change your perspective on how you see the Forex market so that you can eventually trade the Forex market for profit. Alright? Now listen, as I always tell you guys in each and every video, very thankful to have you guys here. Been telling you guys this for years now. I realize you guys could be anywhere in the world, but you watch my videos, so I really want to thank you from the bottom of my heart. Thank you so much. Thanks for the support. Now listen, as I always tell you guys as well, if you're not yet connected with us on social media, of course that's Facebook, that's Instagram, you guys need to get connected with us over there. Alright? As well as, if you're not yet a part of the 30,000 subscribers on this YouTube channel, get subscribed. And remember, we're putting videos over there on Vimeo as well. Get connected with us over there. Now listen, this video today is going to be about, it's going to be an update to a video that I put out a few years ago. I thought it was time for me to do so because I get a lot of emails each and every month about this video. And it's basically an update to the how is it that you can trade a small account. There are a number of people who are just finding Forex for the first time, newbies, brand new, even those who are, maybe familiar with Forex already, 5-10 years in. You may be working with a smaller account, so you want to know, how is it, Mr. Scott, that I could trade a smaller account so that I can eventually trade a much larger account, grow your money. So I'm going to give you guys a little update to that video. In that video, after, I guess, over the years, because since I put out the video, I had people who joined and they wanted to get insight on the spreadsheet that I had created, the compounding spreadsheet. And I want to tell you guys, I had to rethink the idea of using that compounding Excel sheet, the spreadsheet. Alright, and I'm going to explain to you guys why. That Excel spreadsheet, it gave you, like levels, level 1, 2, 3, all the way down, where, if you had this much in your account, once you get to the next level, you could then increase your volume to this amount, and then you'll keep going. Once you close some trades, and then you bet this amount, and you close some more trades, assuming that you're gonna be closing your trades in profit, your account balance is going to grow, you'll be increasing your volume. Now I want to tell you guys why I had to make this updated video to the old video. The reason why is that in that video I was sort of setting a tone that I guess over the years I didn't really think it was beneficial to traders, and I want to tell you guys why. Myself, I believe that if you're trading on the Forex market, you stay in that market until you have a reason to get out the market, okay? Unfortunately, what that spreadsheet did for some people, it didn't serve a good purpose, and I'm going to tell you guys why. Let's say your first level was at, let's say, I don't know, 10 cent, trading at 10 cent, and you would ride 10 cent until you got to, let's say, I don't know, 30 cent. Some people would, when their account balance got to, let's say your fifth level rather. Let's say your fifth level was when you got your account to $20. People would, they would basically hold on to that trade, or they would once they get to $20, they would close out their trades. All right, and that was it wasn't good to actually show you guys that, so I want to clear that up. Over the years, of course, you tweak things when you realize some other things, and you say, I don't like that. Let me tweak this. Let me change this. See, I'm one who I believe that, I'm going to stay in that trade until I have a reason to get out. Because of that, if your next threshold is, let's say you went from $10 to $20, and your next threshold is $40, if I had traders, as soon as their account got to $40, they would shut down their trade. I'm basically teaching you guys, well, I'm doing you more of a disservice. because at $40, I don't know where the market is when you reach that next when you reach that $40 threshold. If you decided to shut down your trade and the market is still going, yes, you can get back in. But you see, as I teach my students the stay in your trade strategy, see, it will do you a disservice if you just shut down your trade at that point. You see what I'm saying? So that compounding spreadsheet is not the way to go. What I believe in now is if you started off with $10 and whatever volume you decide to trade at $10, you decided to get in and you held that trade until, let's say, that thing is kept going up and away, and then you didn't have a reason to get out until you were at $117. So you've basically took your account tenfold. You know, you're at nearly 11 times the amount, or 12 times the amount inside of your account. So when you close out your trade, that's when you need to reassess the amount that's in your account, and then you tweak your volume based on the amount that's in your account. Not when you get to that $20 threshold, shut down your trade. Then you open up some more. When you get at that $30 threshold, shut down your trade. Then you get in again. That's not the way you do it. Because every time you make a subsequent entry, and let's just say you're riding the peso, okay, riding the peso down, and you get at $20, you shut down your trade, you open up another trade. You're taking 20, your thing is, okay, I'm gonna take it at 30, and you're riding it down some more. If you're doing that, if you open up a trade right after you close down your $30 trade, or you close down your trade that got you to $30, well, it might not be a good idea to keep riding that trade down. You know, you may have to, like I teach my students, based on the perfect entry strategy or based on the stay in your trade strategy, it might not be a good idea for you to get back into that trade. So the best thing to do, if you guys have some type of system in place where you're gonna stay in your trade, as I teach my students, the best thing to do is to just let the market go where it's gonna go, and then you get out the market, rather than using the threshold based on the compounding system that you have, that you're working with, as a reason to get out the market. Because that isn't the way to go. And I apologize for any who may have been confused about the compounding system. That's not the way that you go. You can use the compounding system as a way for you to see how you can grow your money exponentially. But in real life, what makes sense to me, maybe not to you, but what makes sense to me is I'm going to ride this trade as long as I can, and then I'm going to sit back and I'm going to reassess things and say, okay, well, now I have $5,300 in my account. I'm going to increase my volume accordingly. That's the way it should be done. So basically, if you're trading a smaller account, you have to have some type of system in place that you're going to follow, regardless of the amount that's inside of your account. Okay? Do not use, I know some of you may have taken screenshots of what I had, and some of you may have said, okay, well, this is what I should be trading at. I don't know what money management system or plan that you have. I know that a lot of people, they listen to what people have said, the Forex forefathers, what they may have said over the years, only trade a certain percentage of your account. Whatever it is you choose to trade, whatever volume you decide to trade at based on the amount that's in your account, you have to follow that system. I'm not here to say that your system is wrong, my system is right. I'm here to tell you that whatever system you have, you need to follow it. Okay? A lot of people, unfortunately, who are new to Forex, they're being sucked in because of the quick turn. People are showing these large amounts of well, they're giving people the idea that you can turn money over real fast. Now, it's not to say it can't happen, but a lot of people, unfortunately, those who are teaching, hey, you can turn this money over fast, they're not teaching that you need to follow a certain money management plan. You need to trade at this volume if you're going to be trading with this size of an account. All right, and that's most important, and that's what I want to convey to you guys today, because if you do not follow some type of money management plan, which is more than likely one of the top reasons why people they lose because of their poor money management skills, budgeting, whatever, you know, you're gonna find yourself on the losing end. Okay? A lot of people, they may have a strategy, you know, a trading strategy, but they still lose because they don't have a money management plan that will keep them safe in the market. All right? And this is what I teach my students. You must have a money management plan in place from the beginning. Without that, you don't know what to do. Okay? So I just wanted to give you guys a little bit, I guess, more clarity to that video. Yes, that video, it gets tons of views. There are still a lot of people who love that video. You guys can check it out. It's, you know, how to trade a smaller account. To be truthful, when you guys become students of the So Done Easy Forex movement, you guys are gonna adopt my money management plan. All right, my money management plan will show you what you should be trading. All right, at the end of the day, as a Forex trader, your goal should be to increase your pip value. Okay? That's what it should be. To increase your pip value, your overall pip value. You guys notice I traded $15 every trade that I opened, $15. If I started off with a $100 account, you know, you trade, you increase your volume as you go, and then next thing you know, you're at $1,000. You increase your volume based on 1,000, you get to 5,000. You increase your volume, and then you get to 10,000. And then all of a sudden, now you're trading with a larger pip value. You can open up a higher volume so that you can make more money. So that's the bottom line. That's what you want to focus on. So hopefully this made sense to you guys. This has been a long awaited video that a lot of you have questioned me about. So I just want to let you guys know, you know, watch this video again and again until you can get it down. If you guys love the original video, then by all means watch that video until you absorb and retain that information there, because you can still learn something, and you can probably still use some things from that too, as it's known that people have different trading styles. You know, that might work best for you, rather than doing it the way that I've adopted and the way that I'm teaching my students now. Okay, so just to let you guys know, you know, definitely appreciate you guys watching this video. Remember, if you're not yet a part of the 30,000 subscribers here on this YouTube channel, please get yourself subscribed to this video. If you're not yet following us over there on Vimeo, follow us over there as well. Remember, if you're not yet a part of our followers over there on social media, Facebook, Instagram, get subscribed to us. I mean, follow us on social media as well. And then remember, you guys, very thankful to have you guys a part of my, you know, my subscribers list. I'll see you guys in the next video. Yusef Scott, the Forex GOAT. All right, peace.